Hey, what's up? I'm Russ. This is Dapper Dividends. Thank you for swinging on by my channel and coming on down to the old dividend dungeon. We're going to talk about Realty Income and their merger with Vereit. I looked into it on my lunch break today. And speaking of lunch break, I've been a little bit nervous about doing some of these videos because I'm not a professional. I'm not an expert. I'm literally just your average ordinary dock and door repair tech. As you can see here this morning at 5:45 a.m., I'm on my way to the job, eating my oatmeal, going to Valley Honda in Naperville, working on a Rytec door, changing the springs, getting it working to make sure that these Honda cars can get in and get serviced and the doors can shut behind them. That's what I do. I love dividend investing. I have such a passion for it, and I just wanted to share my little bit of knowledge with everybody. And my wife and I are working to the point where passive income will cover all of our expenses. So with that being said, let's talk about Realty Income and their merger with Vereit. So Realty Income is planning to combine with Vereit, and they do want to, as they say, further distance themselves as the preeminent net lease REIT. Little bit of the overview, just going to pick out a quick few points here. It's an all-stock acquisition, meaning that instead of cash, they're paying with stock by Realty Income and Vereit. The Vereit shareholders will receive 0.705, a share of Realty Income for each share of common Vereit that they own. The pro forma ownership will be 70% for Realty Income shareholders, which is myself, and 30% for Vereit's shareholders. And they will be spinning off, we'll get to this in a minute, they're spinning off all of the office assets of both companies into a new self-managed, publicly traded REIT, SpinCo, as they're calling it for now. I wish they would just leave it and call it SpinCo. That would be fun. I think I should get a SpinCo shirt, SpinCo hats. I'm going to be the CEO of SpinCo. And 2 Vereit members will join Realty Income's board of directors. This is expected to close Q4 2021 for both the merger and the spinoff. They have very similar clients here. Check out that the top ones, keep in mind, Walgreens, 7-Eleven, Dollar General, Dollar Tree, Family Dollar. These are all the Realty Income clients. And as we pop on over to Vereit, Walgreens, Family Dollar, Dollar General, FedEx. Look at that, go back. FedEx is on there. CVS is on there as well. So a lot of the same companies they have in common. And why is this a good thing? Well, check this out. They're diversifying. This is really good, not putting all your eggs in one basket. What I love about this, you see that before the transaction as Realty Income, 6% of Walgreens was the percentage of the rent. After, it's going to drop to 5. 7-Eleven dropping from 5 to 3. Dollar General keeping the same, 4 to 4. The only really increase here, I see Dollar Tree going from 3 to 4, but that's small. One thing I really love about this, check that out. At number 10 was AMC. After the transaction, because of all the new companies coming in from Vereit, AMC is gone. BJ's will take their place with a 2% percentage of rent, which means AMC is less than 2% of the rent. Before the merger, Realty Income has 12% concentration in convenience stores, and pro forma, so after, it will drop to 9%. It's kind of like what we want to do with our portfolios, right? You don't want to have too big of a concentration in one company. So this is what they're doing. This is helping them to diversify and get some of those percentage numbers down. Couple things to point out. Their new enterprise value will be $50 billion, $33 billion from Realty Income, $16 billion from Vereit. The number of properties will jump to 10,300. So Vereit had about half the amount of properties as Realty Income did. The weighted average lease term will stay the same at 9 years. A lot of it's going to stay the same. The occupancy will both be at 98% still. But check out the top 10 client concentration, what I was just talking about, drops from 36% as Realty Income to 31% as the pro forma Realty Income. And the top 10 industry concentration will go from 67 to 64. Slight drop there. Really nice to see them diversifying and strengthening across the board. And what I suspect that they're doing with the spin-off, with the SpinCo, getting rid of all the assets between the two companies, is I think offices are really risky, and it's just the nature of the world. And they're trying to get out ahead of it and get something that's dead and dying out of the portfolio. So what better way than to do a little bit of housekeeping with something that's not a core asset? We'll get to why they're not a core asset in just a second. But consistent with the merger, again, people like me, Realty Income shareholders, will own 70% of SpinCo, while Vereit will own 30%. So we will be receiving shares of the newly formed SpinCo, whatever they're going to call that. Interesting that the concentration will be healthcare at 17%. You can see they have companies like Cigna, Merrill Lynch. Their top 10 concentration will be 47%, and the number of properties, 97 offices that will be spun off into SpinCo. I pulled this off Vereit's website. You can see that 16.5% of their properties were office, but for Realty Income, only 3.1%. So not a core asset, not a core holding. I think they just want to get rid of something that they know is really being disrupted right now with all the work from home. They have 43 properties. That's it. They want to get away from it. One thing I found interesting in the release was that their planned spinoff of the office portfolio maintains Realty Income's preferred portfolio mix, is consistent with its focused investment strategy of acquiring high-quality real estate leased primarily to retail clients that have a service, non-discretionary, hello Walgreens, CVS, and or low price point component to their business, and industrial clients that are primarily investment grade rated companies and leaders in their respective industries. Again, the anticipated spinoff is going to be 97 domestic office properties, which are pure play self-managed portfolio. And pursuant to the terms of the merger agreement, Realty Income may also seek to sell some or all of the combined company's office properties, subject to certain restrictions. And in addition, Realty Income may elect to retain some or all of the company's office properties following the closing of the merger. I think what they're going to keep is, I remember reading somewhere, and I couldn't find it, that they have the Walgreens and FedEx headquarters. I would suspect they're going to keep something like that. Like, that is notable property, the Walgreens headquarters. You're going to have people eventually going back to that kind of office, and I think they're going to want to hang on to that, and that's all that that means. Few things that I love about Realty Income, just to share with you since I've got you, is check that out. They are the number one enterprise value net lease industry. So net lease, triple net lease, means that the lessees or the tenants pay the taxes, the insurance, and the maintenance or upkeep or repairs on the property that they're leasing out. I think it's pretty cool to see that by themselves, they were at $33.1 billion in the lead ahead of WP Carey, but now they'll be at $50 billion, just a giant in the net lease REIT sector. One more thing that I love about Realty Income is that, look at that, since 1994, they have a 15.2% compound average annual total shareholder return, beating all the benchmarks and the dividends. We can't wrap it up without mentioning that they are the monthly dividend company, 94 consecutive quarterly increases since 1994, 110 total increases since the 1994 NYSE listing. Just a very nice track record of increasing dividends that work out to a 4.4% compound average annualized growth rate since the NYSE listing. So this is still just in the works. I know I saw there's a bunch of lawsuits being filed, a bunch of, I call them ambulance chasers, trying to get their names out there. But this is going to go through. This is as fair and square of a deal as I can just see from what I've done my quick research on. I could be wrong. If I am, let me know what you think. You can either follow me on Twitter at RustyRam78 or check me out on Instagram at Dapper Dividends. So thank you for sticking around and checking this out. If I've helped you at any point during this video, please go ahead and ring that bell for me. It costs nothing for you, means the world to me. Leave your comments below, and I will talk to you in the next video.